Kyle, it's great to have you with us on the show.
Hope, pleasure to be here. Thanks for having me on.
So, Crypto Week was partially a success, at least the Genius Act. I was going to say Genie. Genie's out of the bottle now with the Genius Act. You have called it the most consequential piece of financial legislation since Dodd-Frank. Why?
Yeah, well, unfortunately, United States Congress has not passed much legislation since Dodd-Frank, so kind of a low bar. But no, in all seriousness, Dodd-Frank really did change the rules and norms of kind of the U.S. banking system, and has had a kind of profound impact over the last decade in how people get mortgages, how those mortgages are underwritten, and obviously with the rise of private credit recently, a lot of that is downstream of Dodd-Frank. Has really reshaped kind of capital markets. The Genius Act, I believe, will have far reaching consequences, and in fact, arguably cannot be much further reaching than Dodd-Frank. It is my expectation that in 5 to 10 years' time, that 5 billion people all around the world are holding US dollar stablecoins on their iPhones and their Androids, and all of that will be possible because of the Genius Act. And as that reality comes to bear out, then that's going to have profound implications for global trade, for geopolitical power and imbalances, for tariffs and trade. All of these items are directly going to be impacted by the Genius Act.
Of the several pieces of legislation that there were hopes to be passed and signed into law, this was the only one that made it through. What do you think separated the Genius Act from the others?
Yeah, I think a handful of items. First, the leadership and stewardship of Senator Haggerty, who's the primary author of the bill in the Senate. But we couldn't have done this without David Sachs, Bo Hines, and of course the president. It's been widely publicized. The president had to twist a few arms in the last few days to get us over the hump. So first, I want to give credit to those folks. In terms of like other kind of things that made this possible, I think it's the success of stablecoins so far. There's 230, 40, 50 billion roughly worth of stablecoins outstanding today. And people have seen the power that comes from that. It's not hypothetical. There are plenty of stories around the world of people who use stablecoins, hold them, and the strategic benefit to the United States is clear. Third, probably major item is I really give a lot of credit to Secretary Bessent. He has been very clear. He took on his job knowing that the U.S. has a fiscal debt crisis looming, and he needs to find people to buy treasuries, and stablecoins are the kind of the obvious outlet for that. So he has been very, very vocal and very supportive in favor of the act. And then probably last and certainly not least would be the kind of collective will of the American people and the crypto industry, and that was reflected on ballot day in November. Industry mobilized people, resources, and money to win key races in the Senate and in the White House. And the point of democracy is that people get what they vote for. And crypto was a very loud item in the ballot. No one is surprised about that. That was very clear. And the people who were pro-crypto got voted in, and their promises made, promises kept. So I think this kind of confluence of all of the above is what made it possible for the Genius Act to pass, whereas almost all other legislation fails.
You teased a bit that you played a role, your firm played a pretty active role in lobbying to get this passed. Why was it important for you personally, as someone I know who you've been in crypto for almost 10 years now? I know Ethereum was your first love, according to something that you said on another podcast. But for Multicoin Capital specifically, why was it so important for you to be involved in lobbying for the Genius Act?
Yeah, I mean, look, would the act pass without us? Probably. But with something like this that has implications on 200 portfolio companies of ours, will have impact on my life for probably the rest of my life, and will impact my ability to execute, fundraise, do deals in the future. We thought it was imperative as fiduciaries to our LPs to be as involved as possible, and we're fortunate to be in a position to be involved. We have the resources, the knowledge, and the know-how to do so. I give a huge amount of credit to my partner and our general counsel at Multicoin, Greg Extathalis. He has been working tirelessly with members of Congress, their staff, as well as members of Treasury and other key departments on this. And I believe that a lot of our feedback was well received. I know in at least one instance, we kind of came up with an idea that was not in the bill at all and that made its way in. And so, look, on the margin, will that help the world? I hope so. I'm here to try and help. And if our feedback is well received, then, we want to do so.
Let's stay on the global theme for a beat here. In getting this through, how does the US's role and position in crypto on a global scale change?
Yeah, I don't think you can really understate this. There's 8 billion people on the planet Earth, and it is my estimation that if you were to go to each of those 8 billion people and ask them, hey, if you could denominate your net worth in any asset, what asset would you choose? And you could use Apple stock, S&P 500, bars of gold, euros, yen, dollars, Bitcoin, whatever you want. It is my estimation that 60 to 80% of the population would say US dollars. And if that assessment is approximately correct, then that means over the next decade, those people are going to start to hold a lot more dollars than they hold today. That is going to be explicitly a increase in wealth for people who currently hold dollars at the expense of people around the world who do not hold dollars. This has strategic interest to the United States, specifically relative to our foreign adversaries, folks like Iran, North Korea, China, Russia, etc. Make it as easy as possible for the citizens of those countries to leave, not necessarily with their feet, but with their balance sheets. And this is going to change global trade. It's going to change our fiscal situation. So I just cannot understate the impact of this by basically allowing capitalism to function. Like, if you really think about this, all we're saying is there's been some friction and cost of getting dollars if you live abroad. And all we're saying is lower the friction of doing so. And that's just called capitalism. Let the money flow where it wants to flow.
So would you agree with the statement then that in getting the Genius Act here passed, that the US's goal of being the most powerful player in crypto on a global scale, you could argue you're kind of already there, but this really cements the US's standing as the most powerful player. Would you agree with that statement?
Oh, absolutely. There's $250 billion of US dollar-based stablecoins. I think euro-based stablecoins are under $1 billion, maybe under a few hundred million. So we're talking 2 orders of magnitude discrepancy as a measure of what currencies do people around the world want to hold? And the answer unequivocally is dollars. And that happened under a Biden administration that was outright hostile to the crypto industry, and under a regulatory environment in which the fundamental legitimacy of stablecoins was in question. Today, that's no longer the case because of the Genius Act, and so it's just natural that's going to proliferate from 250 billion to 2, 3, 4, 5, 10 trillion over the next decade, and with that is going to be explicitly exertion of American power abroad.
So you made the argument and the link, I think, quite clear. Jamie Dimon, JP Morgan's CEO, on the most recent earnings call for his company, he said that he thinks that stablecoins are real, but doesn't actually know why someone would want to use a stablecoin as opposed to just a payment. What do you think he's not getting here?
He is the CEO of the largest American bank, and the primary customers and users of stablecoins are non-Americans. He has a very US-centric view of the world, which is fine and well. Stablecoins are not going to directly impact the lives of Americans in a visceral, obvious way on a day-to-day basis in the foreseeable future. They are already impacting the lives of people very viscerally outside the United States. And the adoption, the vast majority of the adoption will occur outside the US, not in the US. Okay,
so let's move over to the Clarity Act, which in the ambitious crypto week that we were having, is still now headed toward the Senate for a vote after passing in the House. If you look at the Clarity Act and then the Genius Act, how do the two work together ultimately? And how would the Clarity Act's passing actually serve as another step forward for decentralized finance, which, by the way, I know you kind of also have fallen out of love with, so would love to just hear you talk more about those two in context.
I love DeFi. Not sure why anyone thinks I don't. I own a lot of DeFi tokens, and I am a very large customer of DeFi systems, and believe DeFi is going to be pivotal to the future of the internet and finance generally. Let me touch on Clarity and Genius. These two bills have really been written in concert. Obviously, two different authors, Senator Haggerty on Genius and Chair Hill on Clarity. But these folks obviously know each other and have been coordinating amongst themselves and with industry. So these are really written, together. The Clarity Act, as the name, suggests, provides clarity on the simplest understanding of the Clarity Act would be just it answers the question what is or is not a security for basically all non-stablecoin assets in crypto. In practice, there's a lot more nuance to it than that, but that is kind of the question that it answers and provides clarity to. And so, today there is still this legitimate question of what is not a security, what is not. Mm-hmm. Obviously, we have today securities and commodities. Those two are very distinct constructs, and there's not that much ambiguity between the two of them. Crypto has demonstrated that there's a large amount of gray between those two constructs, and we may want to create a outright third new definition or a third new type of asset. We may want to just say, no, we're going to keep those two definitions, but then just provide a more clear delineation for these new asset types, between them. Both of those discussions are now happening amongst members of industry and members of Congress, and there's legitimate arguments on both sides to that. But once that gets passed, then not only will folks like myself and the entrepreneurs that we back obviously have the regulatory clarity we want, but then more importantly, it will then make it fully permissible and tenable for, again, all of the world's technology companies, all of the world's financial institutions to then leverage those assets as they are intended to be done without any fear of what if the regulators don't like it? Because obviously that question will be answered. So that's really what we're all seeking to get is clarity, as the name suggests.
Yeah, simply. I think I was misremembering my notes from your last conversation that I was catching up on with your perspective. I think what you were saying with not DeFi specifically, but just thinking about crypto and the infrastructure of stablecoins and the technology, even now with Genius, is to create infrastructure and to be less decentralized in some ways, like just as the technology actually exists. So just wanted to clarify that. I want to pivot over to Solana. Multicoin Capital, you've been investing in this really since its seed round in 2018. Since then, how has your thesis evolved?
It's evolved pretty substantially. Back in early 2018 when we first invested, it wasn't even called Solana. It was actually called Loom Protocol, and it was just an idea. And the core idea was, decentralized Nasdaq, if you were to summarize it very quickly. And our core thesis was mostly based around hypothetical understanding of architecture design trade-offs in the system. 8 years later, I think we can look back and say with confidence that the core architectural decisions were all basically correct. We feel pretty good about those. But as these things evolve, you have to kind of update your understanding of them and also adjust it based on the market cap. Investing in Solana at a sub $100 million valuation is very different than investing in Solana today at a $100 billion valuation. And so we've obviously, as fiduciaries, updated our investment thesis, understanding hey, it's worth more money now. Should we keep holding it? Should we sell it? Or should we buy more? Without getting into all the nuances of the evolution over the last 8 years, by the way, if you do want that nuance, please go to our blog. We have a series of Solana blog posts, I think 5 or 6 of them written over that period that I think capture our thinking. But the kind of modern incarnation of the thesis today is what we now call internet capital markets. And you can see this really thriving on Solana today. There are today tens of thousands, if not hundreds of thousands of new assets created on the Solana blockchain every day that are trading. We have obviously Bitcoin is on Solana, Ethereum, and other stablecoins, of course. And actually, this is not super widely known, but there's now U.S. equities are on Solana today, and any non-U.S. person can buy those equities today. All you need is a Solana wallet. It's super easy to do, and those are called X stocks. And so we're bringing not only stablecoins, but all other assets to anyone around the world. You can buy these things in increments of a penny. So you can buy 1 penny of Apple stock or 1 penny of Tesla stock on the Solana blockchain today, and the cost of that transaction is a fraction of a penny, which is just awesome to see. On a technical level, the primary evolution of the thesis is now we've got speed down, we've got latency down, we've got throughput. The Solana blockchain today supports more throughput than there exists demand, and the engineers have outlined a pretty clear scaling path to, I think, roughly 1 million transactions per second over the next few years. I'm not really worried about kind of aggregate throughput at this point. That I no longer seriously think about that in terms of kind of technical evolution. Where I spend my time thinking in terms of technical evolution today is really around market microstructure and how you can provide a healthy, functioning market where market makers can provide liquidity without being picked off by toxic takers. I won't get into all of the jargon there of what all that means, other than to say we want Solana to be as competitive as Nasdaq for functioning capital markets. It's not there today, but there's a very clear roadmap in a blog post that I co-authored about a week ago with 5 or 6 other major leaders in the Solana ecosystem.
How long will it take to get there?
The first pieces of what we are calling the Internet Capital Markets roadmap are rolling out over the next few weeks. The first major piece of that is called the Block Assembly Marketplace, being built by Judo Labs. That is on testnet today and should be live on mainnet in the next 2 or 3 weeks. That's going to have a massive implication. And then the next kind of 2 or 3 major pieces of the roadmap are rolling out over the next 3 months or so. So
if you're NASDAQ listening to this, what are you doing? What should you be doing?
I don't think NASDAQ has I think it's unlikely NASDAQ is displaced in any foreseeable time horizon. Look, I'm a crypto bull, and can I describe a world 20 years from now in which NASDAQ doesn't exist? Yeah, but I think that's not a super helpful world to think about. If I were NASDAQ today, I would be thinking about how can I use Solana in addition to my existing centralized venue. NASDAQ, as it currently exists, is not going away anytime soon, and so that's fine. Keep that there. And then, try and maybe create an alternative trading venue on a system like Solana and tap into the benefits of the global decentralized system. That's what I do.
Well, and you already said this, but Solana's already been described as this decentralized version of the NASDAQ. You're saying there's no future that you can see where the NASDAQ completely goes away. Is there a future where the majority of stock trading or capital markets broadly what would it take for Solana to dominate those? Let's just take stock trading, and what would that actually mean for investors, who are listening to this right now and trying to prepare for the future?
Yeah, I think so. Look, for whether you're trading $100 on Robinhood or whether you're a life insurance company that's buying S&P 500, you don't have to care where the plumbing is or how the plumbing works. And that's the beauty of the plumbing, is it's invisible and you don't care. So it doesn't change your life directly as a user of these systems today. What it will change is certainly for the plumbing providers, obviously those guys are very much in the weeds. And then the group that really cares about this stuff is actually the market makers. And so those guys are pretty intimately involved already in a lot of this stuff. Firms like Jane Street, Jump, Citadel, HRT, that are already some of the largest traders in TradFi, are also some of the largest traders on crypto today. And so those folks are bringing their expertise and knowledge to the design and evolution of these systems today. So that's part of your answer, the answer to your question. I think the other part of this is, people. Look, I don't know when people start just taking Apple stock off of NASDAQ and trading it on Solana. That is far enough in the future that I don't reason about it, think about it, or even really care. Is it like a North Star? Sure, but it doesn't I don't really think about it. The more important reality is the X stocks that are trading on Solana today allow people who are in India, in the Philippines, in China, wherever, to buy $5, $10, $20 of Apple stock in one increment at a transaction cost of 1/100th of a penny. And that's available today. And that cohort of people is, over the next decade, I expect that's going to be a few billion people who look like that, who are going to have access to American capital markets in a way that they simply couldn't have it previously.
So what I'm hearing is, for the person who is already pretty fluent in trading today, a future where it's, decentralized, internet, stock market, however you want to call it, their experience won't really change. Market makers, technology might change, but really it's about bringing, the rest of the world online. Is that the right understanding?
Yeah, correct. If you trade on Robinhood or Interactive Brokers or out of your JP Morgan or Morgan Stanley account today, I don't think that what you see on the screen does not change.
Then for Solana to expand its total addressable market, I mean, you probably have already answered pieces of this question. What would it take for Solana to expand its total addressable market at this moment, its biggest opportunity?
Yeah, so today Solana is worth roughly $100 billion plus or minus. And I've thought a lot about where can that go over the next decade. And the blog post that I published on the Multicoin blog a few months ago, it's called Internet Capital Markets, kind of answers that question. And look, the opportunity for Solana is to take a very, very, very small fee on trillions and trillions of trades. It's on a path to do that today. It is my base case that it gets there. It is the market leader today. Daily active users, daily active trading volumes, stablecoin transfers, all of these things. Solana's number one, and there's no competitor has identified a vector through which I think they are going to somehow supersede Solana on these kind of core properties. And so assuming that holds, and assuming the Solana ecosystem does not get fat and lazy, which I don't think they're going to get fat and lazy, because I'm going to yell at these guys and crack some whips, then I expect that they're on a path to get there, to where there are trillions of transactions per year settling on Solana.
In the remaining moments that we have, I want to touch quickly on meme coins, creator markets like Pump and Zora. Do you see them as distractions? Do you see them as part of the puzzle as this grows bigger?
Yeah, I'm really glad you asked about those. A big challenge that most people have with crypto is okay, they hear about it, they go learn about it, and they learn and they see, a bunch of people trading a bunch of nonsense, and they conclude, therefore, all crypto is nonsense. And I understand why the vast majority of people who have ever looked at crypto have come to that conclusion. That is a reasonable conclusion to come to. But it's a surface level understanding of the systems. What matters in these systems is a handful of core properties: true self-ownership, permissionless access, the ability to move your money around when you want, how you want, do what you want, and most importantly, the ability to create assets at any time without the barriers that come in regulatory capture of Wall Street. And those are all invisible costs. There's no price tag. When you trade a stock of Apple today, you don't see the price tag that comes from the tax of Wall Street. The tax is real, you just can't see it. And crypto sends that tax to effectively zero, or extremely close to zero. And I want capital markets to be more efficient and to exist. And so that's a very general and important thing that I encourage most crypto skeptics to try and peel back and understand. The second part of your question was about Pump and Zora. And, most of the assets being created on those systems, most observers would say are nonsense. And I understand why people come to that conclusion. I'm not here to render judgment on any specific asset or not. Rather, what I think is important to understand is the fact that people have traded trillions of dollars of these assets has proven the robustness of the rails. It's actually pretty incredible that today we have systems like Solana where you've got, call it 5 to 10 million people every single day trading against each other, and the system is entirely unregulated. There is only code that runs, and the system doesn't break. And that includes leverage, and that includes leverage of many forms and types, and it all just works. And to me, that is the empirical proof that Wall Street itself has to see and understand in order for traditional assets to move on to crypto rails.
I mean, I think they are seeing and understanding it, right? I mean, partly because the demand from their clients are there, so they're being pressured to see it. Now you have a much more, and you mentioned this too, friendly regulatory environment to get that friction sort of removed. And I kept referring to this other podcast that I was watching you on from a couple of months ago. It was The Block. But something you said on there that I thought was really notable that I think might counteract the silliness of the meme coins is how this would actually cause adoption to increase if people actually started to get paid through an Upwork. The labor markets would start to get on it. So I'd love for you to touch really quickly on and expand upon that thinking of because when that hits folks' wallets, like on a bi-weekly, on an hourly basis if they're hourly workers, I feel like that would have much more impact than just on an investing level.
Yeah, so the way that mechanically a lot of people are going to start adopting crypto, other than I live in Argentina and I want dollars, which that's like 50 million people. I don't want to trivialize that. But outside of that kind of mental frame is going to be people who are paid in crypto or stable coins, even if they didn't necessarily ask to. And there's a few major groups of those people to understand. Stripe bought a company a few months ago called Bridge for about $1 billion. It was either $1 billion or $1.1 billion. And Bridge's customers include SpaceX. And you might ask, well, what is SpaceX doing with stablecoins? And if you live in Ukraine or Uganda or Nigeria or the Philippines, SpaceX doesn't want to deal with the banks in those countries. Starlink in the United States is $100 a month. Starlink in those countries is a fraction of that. It's, $10, $20 a month. And with the credit card fees and everything else, Starlink is going to lose 10% of their revenue just in financial intermediaries. And so Starlink, Elon and team said, wait, please just pay us in stablecoins if you have them. And today Starlink is probably the largest merchant on the planet Earth that's taking stablecoin payments. So I highlight that as a critical example. The flip side of this also is true as well. Uber recently announced, in the last month or so, we're exploring stablecoin payouts to drivers all over the world. Again, if you drive in the United States, I'm not really sure this is super relevant. If you drive in the Philippines, in Spain, in Italy, I guarantee you a lot of these guys are very interested in this stuff. And I expect in the next 6 to 12 months, Uber's going to start offering stablecoin payouts to these folks. And what are those people going to do once they receive stablecoins is they're probably going to hold some of them, maybe all of them, and then they'll start to do more stuff on crypto rails because they already have those stablecoins. And so I think this kind of bottoms-up adoption via these mechanisms is going to be really profound in changing the adoption curve of crypto.
But it also sounds like a flywheel. I mean, if you've got companies of Uber's scale, global scale, and Starlink's global scale, and you've got payment infrastructure on the back end that allows them to save money, but also to accept payments or to give, drivers and workers other ways to access their cash or invest. I mean, that increases adoption overall. So thank you for expanding on that point. Last question for you. There are many DeFi protocols on Solana in early stages. What are one or two of your favorites at the moment?
Yeah, there's a couple I'll highlight. Camino and Drift are probably the two most notable, and I think they are the two largest. And they're fairly complementary to one another. I'll start with Camino. Camino is you can think of it as a bank on chain, or as kind of industry would call it, just borrow lend. And it's really simple. If you want to borrow assets, then in Camino you can post all other assets. So the most common configuration is people post an asset like a volatile asset like Solana or Ethereum or Bitcoin, and they borrow dollars. They may lever up and buy more crypto, or they may use that for a car payment or whatever else. Today, Camino has, I think, $1 billion of outstanding borrows approximately today, and $5 or $6 or $7 billion of collateral in the system. Conversely, if you're a lender, if you own some dollars and want to make some yield, it's very natural that you could just lend out your dollars fully secured over a system like Camino. And then the Camino system itself, it just provides an algorithm that connects, lenders and borrowers. System runs 24/7 globally, real time. Transaction costs are a fraction of a penny. No origination fees, no early closing fees. It's as simple and straightforward as you can get. Awesome system. Disclosure, I own a lot of Camino tokens. I'm also a very large user of the system. Love it. The other one I'll highlight is Drift. Drift is a derivatives exchange for trading perpetual futures. Today, Drift has roughly 800 million, maybe $1 billion worth of outstanding interest of derivatives contracts on it. So that means people who have, put on a derivatives trade. Most of those trades are people trading crypto. So Bitcoin, ETH, Sol are obviously the three largest names there. But perpetual contracts are the primary way by which crypto derivatives are traded today around the world. There's other systems. Coinbase just rolled out some perpetual-like systems a few weeks ago, and a bunch of the other offshore exchanges around the world offer them as well. Drift is the largest derivatives exchange on the Solana blockchain today.
And I lied. I have one more question for you. If somebody really wants to, sorry, what'd you say?
I have one more answer.
Okay, if someone really wants to keep up with all the developments and it is fast and furious, what is the best way for someone to do that?
Look, if you as just an industry kind of follower, I'd recommend one of the major media publications. Blockworks is my favorite. Those guys are great. There's also The Block and CoinDesk as well, but Blockworks is my favorite. They have daily newsletters you can subscribe to that are pretty good. As you want to get further into the weeds, Blockworks guys have a series of, I think, 5 or 6 or 7 podcasts. I would encourage exploring those podcasts. And then, from there, if you want to go the next level deeper after that, I would say you need to start kind of following Twitter directly and start kind of figuring out the accounts to follow. And the Twitter algorithm will guide you from there. I
just feel like at this point, if you are not investing in yourself in this area and really getting up to speed on it, you'll fall behind pretty swiftly. And it will be a big gap if you look back on this time and not take advantage of it. Kyle, thank you so much for spending time with us today.
Hey, Hope, thanks so much for having me on. It was a pleasure to be here.
See you soon.
Bye-bye.
Bye.